Expectations of severe negative pressure on the U.S. life annuity industry from the pandemic may not have come to pass. But that's not to say that the segment isn't facing a number of challenges, including a rising inflationary environment and historically low interest rates. Here to discuss AM Best's latest review and preview report on the U.S. life annuity insurance segments are Michael Porcelli, Senior Director, and Jacqalene Lentz, Director, both of AM Best. And Mike, we're going to start with you. We're 10 plus years in on lower for longer interest rates. At this point, are companies viewing this as normal operating conditions? And what would need to happen for rates to rise meaningfully at this point?
Thanks, John. I feel like companies have capitulated a bit over the past few years. Rates have been low and companies have adjusted, just like all financial institutions have, that credit interest rates to their customers. But now insurers know rate increases are coming. And the thing that is most important is that rates rise at a measured pace. The implications of a rapidly rising rate environment can be worse for companies that depend on their liability profile with embedded policyholder optionality.
Jackie, looking at overall results plus sales trends, it's clear that life insurers have navigated the pandemic pretty well. Are there questions that still remain over the next 12 months, however?
Thanks, John. It's good to be with you. The pandemic clearly drove home the importance of life and annuity products. New product development drove sales in 2021. We've seen marketing for new products like fixed index linked annuities, which gained popularity in 2022. We're seeing a demand for more retirement income solutions and insurers who are offering these type of products to their clients. These new business lines, though, present some execution and operational risks, and they may add diversity to an insurer's liability profile. A strong ERM program and strong ERM capabilities would be essential for those entering new lines, and it may enhance an insurer's credibility in the marketplace.
Now, mortality that has exceeded what was priced for is having a significant impact on the industry. Mike, what have you heard from companies about their mortality books of business?
Yeah, thanks, John. As the pandemic is now 2 years old, we're now hearing how the increase in mortality is impacting not just the older age population, but also the younger working age population that corresponds to much of the life insurance in force. We're also hearing from nearly all companies that not all of the excess death can be fully explained by COVID. The problem is most insurers do not have the data to explain away what these other explanations are. The industry relies on the primary cause of death as reported, but does not have control over the data at the source where it's collected. As such, there is a reliance on taking COVID and non-COVID deaths as reported to the insurer or reinsurer. But mortality has been running high, and this has had an earnings impact. If this remains in the coming years because of something systemic, that has yet to be identified, or will it be just the opposite and reverse itself because deaths have been front-loaded? All this just remains to be seen, but right now there is no doubt that life expectancy has been shortened.
Now, M&A came back big alongside a number of startups entering the market. Jackie, what do you see as the main drivers for all of this?
M&A is being driven by opportunity to diversify earnings, maximize shareholder value, capital efficiency, improved asset management, all common themes. M&A also driven by interest rates, the desire to reduce interest rate risk and find some higher yield. Available capital has flowed rapidly into the life insurance industry, especially from private equity players with an ability to source and manage fixed income assets.
Jackie, in AM Best view, where is the industry on innovation?
2/3 of life and annuity companies are scored as either moderate or significant in terms of innovation. Legacy system upgrades continue to be top priority for many companies. Big data focus has helped streamline business processes during the pandemic, making it more efficient for agents and customers to interact. despite COVID shutdowns, which sort of stymied face-to-face sales. There has definitely been growth in the direct-to-consumer channel. Improving customer experience is definitely a focus we're hearing about in 2022. Innovators are focusing on refining markets to capture sales and growth in millennials, middle market, and some underrepresented demographics.
So AM Best has moved the U.S. life and annuity outlook to stable. Mike, the outlook was negative at this time. What has changed?
Well, a year ago, the life and annuity team was asked that question, and the answer provided was that we would need to get to a place where we weren't worrying about the things we were worrying about. I think it's fair to say that we aren't worrying as much about the things we were concerned about last year, but we needed some time to see how things played out in 2021. There have really been a lot of things going on in 2021, and it's been an exciting year to be an observer of the industry. We saw companies continue to adapt to the current environment, both in how they manage and operate, as well as how they sell their products. We saw some companies with blowout sales numbers. We also had a robust M&A market. In addition, we had startups and new capital injected into the sector. Many companies had record earnings, mostly driven by investment gains. But through it all, mortality continues to be greater than expected. So there's a lot to digest, but on balance, I think it's fair to say that it was appropriate to move the outlook to stable.
That was Michael Porcelli, Senior Director, and Jacqalene Lentz, Director. And I'm John Weber for AM Best TV.